What's going on, guys? Welcome back to my channel. This is Shocks and this is ShocksCapital FX. So today we are going to talk about the volatility or synthetic indices which are offered by Deriv. So we are going to be talking about how best can we be trading these indices and how best can we utilize the patterns which present every day in these synthetic indices. So before we go any further, guys, if you haven't subscribed to this channel, please do so, and if you haven't turned on your post notification, do so that you can't miss or you will not miss any video that we upload every week. So guys, we're going to talk about these synthetic indices. So these indices are offered by Deriv. If you don't know, or if you don't have an account with the Deriv broker, which is the only broker which offers these indices, you can create an account using the link in the description down below, and you can be taking advantage of these simple and straightforward patterns which present on a daily basis on this broker and on these indices. So these indices are simulated and they present patterns which repeat over and over again, which you can be taking advantage of. So guys, we will be starting on the V75 strategy and explaining what really happens with these indices. So number one, guys, I want you to understand that at every day beginning, so we have started, you can start taking notes if you want to. So this is the day beginning, which you see here, represented by this period separator again. So and this is the day end. So we want to focus in this region where the day is beginning here and the day is ending here. We want to see what happens from here to here, what happens really. So what I want you to know is the market or these indices moves in one or two shapes with their variations, of course. So number one, it starts the day, goes up and goes down. That's an A pattern, meaning it goes up and goes down. That's an A pattern. Or it starts the day, goes down and goes up, meaning it forms some sort of a V shape every day. So this is what I want you guys to understand. We want to take advantage of both waves or at least one wave. So if you are not really vested with this knowledge, you can be taking advantage of one wave. Let's say you wait for the market to present with you one wave or one side of the pattern, then you take advantage of the other side. So how are we going to take advantage of this? We are going to be using market structure and order blocks to understand how and where to enter the market. So what really happens here is this. So let me spell it out for you this way. The market will start, and if it's going up like this, I'm saying it's an A, but the A is represented market structurally in a wave form. Let me use paint to illustrate this. So we are saying we have an A pattern, something like this. So what happens in this pattern is when the market opens, if it starts going up, these are synthetic indices, it will go up like that. This is market structure going up. Then when it gets to this is what we call a peak formation. So it can be a peak formation high, or if it's a V pattern like this, it will be called a peak formation low. So what you want to do is you want to see this first. So you will wait for price to play out like this, then you wait for price to break any of these lows. When it breaks a low, I want you to see something in this market structure. Price is not breaking the lows as it's going up. So when it breaks a low, that's your first sign that price wants to turn and you are getting ready to pounce and catch the next wave which will happen. So a move back above this break to an order block in this area is what you will be waiting for, and you strike here your stop loss goes above the OB, and you catch this wave for the day. So number one, you can be catching this and this if you are experienced and if you know what you are doing, but I want to advise you to wait for one of these to play out first, then you catch the next one, the next phase, which is this other phase. So this is the A pattern. Then the V pattern is just an inverse of this, where we are having price moving down like this. Then you wait for a break of that, a retest, and you catch this next wave. So I'm saying this, it's best shown on the what? On the 5-minute time frame. So this is the 5-minute time frame. As you can see, we are having price, this is the day beginning, we're having price going up in market structure form, then price then breaks this low. When price breaks this low, it comes back to the breaker, presents us with this move, you see, then comes back to where it started, gives us another retest of this order block, and we are catching this move. Or you would have waited for this break of market structure, you see here, this break, then a retest of this OB, then you catch this move. So we are just doing market structure, but as you know, I said it moves like a V. This is the move down, this is the move up. You miss this, you catch this. You anticipate this, you catch this, or you catch all of them. So number one, you see market opens, breaks this market structure like this, market structure break, retest of an order block, which is what I call RT, or return to order block. So this is what you are waiting for. You sell here, you catch this move, breaks another market structure, as you can see here, breaks market structure, BMS breaks another market structure, they come back to retest this OB, you see here, retest this OB again, throws you a pin. That's enough confirmation for you to go short. So you go short. Let's say you don't want to trade this first move, you just want it to play out so that you know what you are doing. You wait for a break of a high. Since we are going down, we are not breaking any highs. When this high breaks with this move, you mark this OB and you wait for price to come back, and as you can see, price didn't come back to this order block, and you wait for another break of a high, which happened here. Wait for this OB, didn't come, break of this high, and break of this high again, break of this high, retest of this order block. Finally you have a trade, break, it comes back again, trade. So you can be adding entries as we go, So this happens every day. So there are these kind of days where it just goes one direction. So this is where you need to know how to trade both waves in case they don't present you with the other wave. So this is what happens. It breaks market structure here. This is the stop hand, breaks market structure, goes up, throws a pin to an order block. You catch him right here. Throw, I don't know how many lots you're going to throw here. Catch this aggressive move. And when it breaks this high, you mark this order block, breaks this high, you are marking this order block. So you see, you can be adding entries when it comes back to here, or you can take your profits up here, wait for it to come back, enter some more trades there, and you are going up like that. So this is what you can be doing on these indices. And as you can see, it goes down, breaks a high, starts another wave. You can be having two waves in a day. So this is down, that's a V pattern, can be having a V and an A, as you can see here. So you just need to know how to read market structure, and you will be good to go. So this is just consolidation. When it's consolidating like this, you are not doing anything, you just leave it like that. So let's look at another pair which presents us with this kind of a pattern. So this was V75. Let's look at V50. Let's V51S. Let's look at this. As you can see, first wave, second wave. That's our A pattern, or our A cycle. So this is more of a cycle. So number one, breaks pattern. This is the first market structure move, breaks the market structure here, breaking the high, comes back to retest this order block. As you can see, you catch him there, you target this high. So that's your safest take profit here, the STP. And then you break another high, comes back, retest the order block. These are continuation patterns which you can be adding entries until you can see a low being broken like this. Low, broken, low, broken, low, broken. Then when it breaks this low right here, when it breaks this, you are marking this OB and you're anticipating price to come back and retest this. You catch him there. So you can go with him up and go with him down again. It just depends on your ability to see these patterns in front of your computers, in front of your screens every day, in front of your eyes. It's there every day. 1, 2, that's the A. You miss this, you catch this, break. You are just waiting for clear patterns of how to enter. So you can be trading 2 pairs on these volatility indices and you can be killing it. I'm telling you, you can be killing it hard. So this is the move down, then the move up. You just need to be identifying your patterns. Let's say you anticipated this and you want to catch this up move. Your anticipation will start here, breaking market structure. Maybe you'll be waiting for this OB, didn't come to the order block. So guys, if you don't know or if you are confused what these order blocks are, you can go and watch a video on this same channel about order blocks which I explained earlier. So go there, watch what's an order block is, how to trade them. Go there, watch the video on market structure, watch what market structure is, how to read market structure, all of those stuff. Go there and watch it and come back and really master what I'm trying to get to you here. So this is a break in market structure, break of a high, break, and you are marking this OB. As you can see, you wait for price to come back, you buy here. Then I want you to see something interesting here. You break this market structure, that's number 1. You mark this OB, but see how price come back to this order block you have marked. It breaks market structure, leaves an order block here. So you buy here, you come here, you sell. You're making money both directions. So it's interesting, isn't it? So yeah, this is very beautiful market structure. Break, retest of an order block, you buy. Break, retest an order block, you buy. Break, retest of an order block, you buy. You're just buying until it breaks a swing low or a major low on the time frame which you will be operating on. This is the M5. Guys, you see these patterns are the same. Let's look at V251S. Let's see if you can find these patterns. So you see it's everywhere, down, up. So you miss this, you catch this. Where are you starting? Break of this one, of this high, retest of these order blocks. In this case, break of this high, retest of these order blocks, break, retest, break, retest. So you are just waiting. You're just waiting. You see, these patterns are the same, guys. These patterns are the same. So you just need to identify these patterns and kill. That's all there is to do. You just need to identify the patterns I'm showing you and know the deeper meaning of these patterns. Then you will be good to go. So retest of this, why? Because you broke market structure with this aggressive, you come back and you kill him right there. So this is easy, is it not? This is easy, guys. You are just doing this every day and looking for this. So you can open any pair on this Deriv broker and it will present you with these patterns I'm showing you here. Let's look at this one. This one is crash. Let's see if we can see this on crash 500. Right. So on crash, we break this market structure. That's break. We come back, we retest these order blocks. We break market structure, retest, break market structure here to the upside, retest this OB. So as I said, it happens everywhere. Break market structure, retest of OB. So if you don't know how to trade crash, Maybe you should be using this one. Break of market structure, retest of an order block. It's simple, guys. Just have the patience to wait. Break, retest. It happens every day on any pair. Break of market structure, retest of this order block. You can be waiting for that and can be killing hard. So this is what happens, guys. Thank you for watching. Subscribe for more videos of this nature, and don't forget to trade what you see. To trade what you see, you have to know what to see, and this is what to see. Thank you.